Growing our trading capital and bank accounts is all we want as traders. But how? Hi everyone, welcome back to the channel. It doesn't matter if you are a beginner or you've been in the game for a while. We all want to turn those small wins into life-changing profits. But let's be real, it's not always easy. But today, we are diving into an ultimate guide to growing your trading capital. We are going to talk about strategies, the mindset, the secrets you need to know to take your trading account from zero to hero, from compounding to mastering risk management. This video is packed with actionable tips you can start using today. Imagine starting with any amount and turning it into thousands, 10,000s, even more. Sounds amazing? Well, it's totally possible if you follow the steps we are about to break down for you. But remember, you need the right strategy, discipline, and a little bit of patience. With that, let's see you in the other side. Yes, the ultimate guide to growing your trading capital as well as your bank account by Forex Uganda. So first of all, we need to know what is capital. This is the money you need, or this is money available for you to do business, for you to trade the markets, because trading is a business. So that's why we call it capital, actually. So you need capital to do business, of which trading is business. That means we have to think about our business. We have to think about trading as a business. Okay? So capital is the amount available for you to trade. Sources of capital: where can you get capital from? Personal savings, profits from previous trades, external funding, prop firms. You can use prop firms to fund your personal account. We have a video detailed about prop firms coming out soon also, so make sure you check it out. Sources of capital. You have to have a source of capital. So this answers the question of, should I leave my 9 to 5 and I concentrate on trading? Do you have a source of capital? Because the business will always require you capital. So first secure a source of capital before you say, I am quitting. I repeat that, sources of capital. You're not going to quit your job when you don't have a source of capital. So before you quit, at least first put things in place. You can sell me trade prop firm accounts until I pass them, then that will be my source of capital. A personal account is very important, as we are going to see in the following slides. So make sure you watch the video, all the slides from the beginning to the end. Also make sure you subscribe, like, turn on that notification bell so that you don't miss out on important tips. So why is trading capital important? Why is capital important? Why is actually money important? I have a saying that goes, money makes money. You cannot make money if you don't have money. So you cannot participate in trading when you don't have money. Though you can do what we call demo trading, demonstration. Okay, so you have to have capital for you to trade. Slide number 2. What is the right capital? We have seen that somebody needs capital to trade, but what is the right capital? How much should I invest? How much should I use as my capital? That is a very common question. So here is the answer. There is no right figure. There is no right capital, but rather there are several factors that will depend on for you to say this is the capital that I have. Number 1, your financial goals. What are your goals? You have goals of, let me say, making big businesses, building apartments, buying cars. I know most of you like cars, luxury cars, and you're still funding your account with $10, $5, $2. But you're going to find that you have the capability of funding your account with $5,000. You have the capability of funding your account with a lot more than that. But you find yourself fearing You're waiting for the perfect time. And something is telling you, no, you wait, you first be trading demo for more couple of months. That demo is not going to help you a lot. The demo is there to demonstrate. The demo is not there to show you or to teach you, but it is there to help you demonstrate what you can actually achieve. You get me right? That's why you find that most people say, I make money on the demo account, but when I go on the live account, things fail. Why? You're giving more time to the demo account than the live account. So factor number one, what are your financial goals? Fund a reasonable amount of money. If you're capable, don't fear to fund. You see point number two. It says don't fear to fund your account. If you do have the money, it is very easy for a person that has $1,000 to make money than a person that has $10. And you're going to find that the $10 are his or her last line of defense. I'm not saying that less capital is bad. If it is what you have, it is okay. But if you're capable of funding more, don't cheat yourself. Be fair to yourself, actually. You have big goals. Fund those accounts. Okay? So, another factor is your risk tolerance. What can you tolerate to lose? So you don't fund an account from nowhere. Sit down and make a plan. If I fund $1,000, $10,000, what is my risk tolerance? Can I tolerate to lose this money? Not in one trade, but let's say in a long run. But a person that has the right strategy, person that has studied, it is very hard for you to lose that amount of money. That is where strategy comes in. So we also have to look at your trading style. Are you a scalper? Are you a swing trader? Are you, you hold positions for a long time? So you're going to find that the kind of trading style you do, the type of trader you are, also should be considered as you fund your account. If you're a scalper, you obviously need a bigger amount of money. But you're going to find that people with smaller accounts are the ones that want to scalp. You see? So you blame the market, but yet you have the capital, but the style you're using to trade is not right. Okay? Then the day traders will need some average amount. Okay? Then those people that swing trade, even if you have a small amount, you can trade because you're going to take a trade and wait. Give it days, give it weeks for it to work out. So what is the right capital? There is no right capital. But you make your capital right when you use the right lot size, okay? When you have when you have the plan of that capital you've funded your account with, not funding capital from nowhere. You're just saying, let me try my luck. This is not trying lucks. We have said anything that requires capital is a business. That means do trading the business way. So point number two, don't fear to fund your account if you have the money. Don't hesitate. Trust yourself that you can do it. If you've really studied, you've seen that your strategy is working, it doesn't mean that whenever you lose, you have to go back to the demo account. Sometimes it is just a bad day. Sometimes you've messed up a little bit. Okay? So keep on the market, fund the accounts. So strategies to grow your account. How can you grow your trading capital? Rather, okay? So we have compounding profits. This is very important. We see that most of us, you make money in the first place, but then you spend that money. So when bad days come, they take on the capital you have. So if they take on the capital you have, your emotions are triggered. You see? So you spend the money instead of actually compounding that money before you spend it. Money makes money. If you have less capital, you have to control early spendings. I think it is in point number 4. Don't spend early. Have a plan. You say that if I make this kind of money, this is what I'm going to save and this is what I'm going to spend. Quit this mentality of I've made $100, you eat it all. You're like, if I made this yesterday, I can do it the next day. That is where you find yourself. You come the next day. You don't want to close a trade that is losing. You don't want to lose at all because you tested money. You don't want to lose money. You know, if you lose what you have, you go back to zero. So avoid early spending of the profits you've made, but compound them more and more. Spend less. I'm not saying that completely do away with spending, but control your spending. If you want to purchase, let's say, an iPhone, you want to purchase a trading setup, it is $1,000. You've been able to make the $1,000 using $1,000. We are giving an example. Don't get that 1,000 and spend it all. No, first say, let me put aside $500. It is going to contribute to buying my iPhone or my trading setup. Then the 500 is my backup plan, because something can happen. You can wake up and you lose the 1,000. You make a mistake and lose the 1,000. What are you going to do? Yes, you've bought the iPhone, but you don't have capital anymore. You're going to sell off that phone cheaply and at a loss because you have to fund the account once again. So control your spending. It is a strategy to grow your trading account. Then always withdraw. People make money and they don't want to withdraw it. They end up blowing the money actually at the end of the week because you don't withdraw. The money is going to give you false confidence. You're feeling overconfident because you made on Monday, Tuesday, Wednesday. You think you're unstoppable. So what you do is you blow the money from nowhere. Okay? Have targets, daily targets, monthly targets. You're like, if I make $100 today, I am going to withdraw $50. I leave $50 on my account. The account has grown. Okay? On the $50, I am going to spend, let me say 20, and then keep 30 as my backup capital. You have to have an account, bank account, where you keep that money. You're growing capital. This business will always require capital. If you want to make big things, if you want to make big money, you'll need money, right? So if you compound as you save, let's say you say, I'm going to make $100 every day. In a week, if I make roughly around $300, some days you're going to win, some days you're going to lose. So let's say $300. You're going to say, let me keep my $300, okay? Let me get $200 from the account. $150 is my backup capital. Then I spend the 50. You see, controlled saving, you're withdrawing some, and you're compounding the profits in just one point. So make sure you you source for capital from elsewhere. Let's say from prop firms. Try the prop firms. They're not bad. But the personal account is more important than these firms. Okay? Remember, you're trying to grow our trading capital. If you try the firms, make the withdrawals, fund the personal account. The personal account should be your main goal. But also the prop firms are good. We have a video on prop firms, so make sure you check it out. A video about prop firms as a standalone. We do have it. Check it out. So we have scaling up, increase position sizes. So as your capital grows, remember you're withdrawing some. You don't withdraw the whole profits as you make it. If you make $100, don't withdraw the whole $100. But instead, withdraw, let's say, $50. If your account was initially $500, you made You made $100. Now it is $600. You withdraw $50. That means the account has grown. You have withdrawn some. That means the person that was using a small lot size, you can slightly increase, but also you don't just increase lot sizes just like that, because down there we are going to talk about it. If you're enjoying the video, make sure you like, share, subscribe. Lastly here, using leverage wisely. Okay, using leverage wisely. So we are going to talk about leverage in a little bit of depth. Okay, so leverage is a double-edged sword. You can use it to your advantage, or it can screw you, right? So people don't know what leverage means. Leverage allows you to control a larger position with less capital. So if you have less capital, that means you need a bigger leverage. That is why it is very important for you to choose a broker that allows you to control your own leverage. You choose the leverage you want. Okay? Right. So as we have said, leverage is a double-edged sword. It has advantages and disadvantages. So some of the advantages are those, okay? You'll have more market exposure. That means you will risk more than actually what you have. It is like borrowed money. But also it has disadvantages. A person that has $10 will want to put in a lot of trades, a lot of positions that can easily blow the account, that can easily lead to margin calls. So leverage is not bad. It is a double-edged sword. You know that, okay, I have this amount, but then I have to risk this. It is a business, as we have said in the start. It is a business. Okay? So you can say, what is the best leverage can I use? What is the leverage should I use? Hash. It goes back to same thing with capital. What are your financial goals? What is your risk tolerance? It is not about just choosing. If you're a person that doesn't, actually, you're a person that can't control yourself on the lot size to put, but you don't want to put many, then use a less leverage. If you're a person that can control yourself, you can use any. If you're a person that wants to risk, you want to full margin, that means you have to use a big leverage. If you're a person that wants to actually use, even if you have unlimited leverage, most brokers will reduce the leverage automatically for all accounts. So don't say, me, I'll increase the leverage when trading news. Most brokers will reduce the leverage. Okay? So this takes us to lot size. What lot size should I use? We have seen how to get what is capital, some sources of capital. We have seen leverage. Okay, how can you use leverage to your advantage? We have seen the strategies you can use to grow your capital. So also, lot sizing is very important to the journey of growing your capital. Okay, so you see an example of here, this short here. It is showing you a person trading, but then he has, first of all, a couple of pairs, different lot sizes. You see, such a person, it is very hard for you to make money, right? So the lot size is very important, and this is a personal aspect. Most of the things I'm saying here are personal. You shouldn't just go and ask your mentor, what lot size should I use on a 100K account? That means you have capital, but you don't know actually. You don't know how to use it. So what you do is this. How do you get the right lot size? Okay. First of all, we do have a video of how to choose the perfect lot size. Using MT5, you have to go out there and test. If I use lot 1 in this amount of pips, how much am I losing? Risk tolerance. You see, these things are connected. One leads to another. That's why they are prepared like this. And yeah, if you need the presentation, feel free to hit up the admins. So, lot sizing is very important because it determines how much you're actually risking, how much you're willing to lose. These things of losing the money that you didn't even plan to lose. You make a loss and you're surprised. What? How can I lose $1,000? How did it come? Oh, what? You know? You have to plan ahead. That means you have to find the lot size. How do you find it? We have a video of how to find the lot sizing. If you don't have a lot size, it should be consistent. You should, as I've said earlier on, you don't just switch lot sizes. Today you've used 1, the other day you've used 2, the other day you've used 0.01. When you make a loss, you reduce. You see, when you make profits, you increase. You have to first keep your lot sizing consistent, because if you lose and you've used a 0.1, let's say you lose $200, then the next day you come and use 0.05, 0.005, it is going to be very hard for you to make back the profit, the money you lost. So it means it is going to take you more trades for you to come back at break even. But if you keep your lot sizing consistent, you put the lot 1 again, you see, if you lose again, no problem. If you make, you're on break even. Remember, trading, the more you get trades, the more you put yourself at risk. That means you have to get trades that are of quality, high quality trades. You have to filter out trades that, we also have videos on that. So, building capital through consistency. You see, one thing leads to another. First of all, you need to have a consistent lot sizing. You say this month I'm going to use lot 1, lot 10, 0.01. But a person using 0.01, no. Even if it is a $10 account, when will you make money? That is why capital is important. Look for capital, my friends. So, building capital through consistency. Now, here, this is where a trading plan comes in, where you set goals. Okay? Goals like your profit target. A day, you come and say, every day, if I get a setup, if I get a trade, I'm going to use a 0.01 and I'm going to be trading GU or GJ. You have to have a specific pair, not trading thousands of pairs. You come today of trading this, the other day trading that. You're not consistent. You have to be consistent in things you do so that you be consistent as a trader. Consistency is not going to come from nowhere. It comes from the things you do. So people are saying, Hash, how can I be consistent? You have to be consistent in actually the things you do. The lot sizing, be consistent for a month. Use lot 1. Be consistent with the pair you trade. All right? Be consistent with your strategy. You're building capital. So you should have a trading plan. Include rules like entry point. Where am I entering from? Where am I exiting from? Your lot sizing. You see the lot size you're going to use. Your risk management rules, Trading times. When am I trading? You don't just wake up and trade because you've woken up. Know when you trade. You say, I trade London session from 10 a.m. to 11 p.m. to 1 a.m. to 1 p.m. Besides that, I don't trade. Consistency in what you do will lead you to be a consistent trader, right? So have a plan. Have a plan of profit targets, loss limits. Know your limit of a day. You know that I have $1,000. I'm willing to lose 200 if things go wrong. If things go wrong. So then you go and find the lot size you should use. If I use 0.10 in 10 pips and my 10 pips is my stop loss, will I be losing the 200? No. Okay. As I've said, we have a video on the lot sizing. So look it out for. So choose quality over quantity. Don't just trade. I've talked about this already. You don't just come because you want money. You just execute. Execute when all your rules have presented. A trading strategy, you people, I think don't know what a strategy means. A strategy, these are criteria of things that have to first present before you execute a trade. Why do you execute a trade when your criteria hasn't presented? You find a person entering a trade but is not supposed to enter a trade. And it is very dangerous. That trade works. If that trade works, that is how you're going to divert. This mind, this brain of ours, it wants things that work. It doesn't matter if it was a chance, no. For it will say, hey. So you keep seeing that every time you're forcing trades, because of the previous trade you took that was offside, it was not your strategy. But because you took a trade from nowhere and that trade worked, so you're like, I think even today it will work. So you have to, then you first lose some good amount of money. After that, you're like, man, I need to go back to how I used to trade. That happens. Why? Why? Because of what we do. So we are going to trading psychology, controlling your mindset, emotions in trading. Fear leads to hesitation and missing out of opportunities. This is going to all hinder you from growing your capital. Greed is going to limit you from growing your capital, because when you're greedy, you're not going to take profits where you have to take profits, and then eventually you lose the money. So psychologically, we also have a video coming out soon about psychology in details. We shall be providing it to you. Okay? We go to why growing trading capital matters. Why does it matter? Okay? It matters because when you grow your trading account, you're going to avoid trading on your last line of defense. Last line of defense, I mean, the only money you have, you're always trading with the last money you have. It inserts pressure on you. Trading that last line of defense, it is always inserting pressure on you. So make sure when you get your account growing, right, keep part of the capital. Not always you blow, then you go back and look for money. You go back to the last line of defense. It is so hectic. Okay? So it is also important because, as we have said, more capital leads to more opportunities. A person with more money will make more money. Money makes money. For example, people that trade news, if you have less capital, you're not going to trade news because you're going to bring your $10 and the broker is going to tell you you don't have enough money. The broker is going to limit, he's going to reduce the leverage. As I've discussed above there, the broker is going to reduce the leverage. So you're going to what? To complain. Hey, this broker is what? But that is the policy. They reduce the leverage. So if you don't have enough capital, you're not going to execute. You put pending orders and they're just kicked. You see, you don't have capital. More capital makes money. And also, a person with more capital will be flexible. If you lose today part of your capital, you're not going to be the same person, or you'll be different from that person that loses the less money he has, all of it. And tomorrow he comes back, he gets good setups, but he doesn't have capital. But for you who has capital and you show up every day, of course you're going to make money. So common mistakes you should avoid when trying to grow your capital. Number one, avoid over trading, emotional trading. When you see things that trigger your emotions, leave the market. Okay? Don't ignore your own rules. That means you should have rules. Okay? Avoid chasing get rich quick schemes. Okay? Somebody tells you, bring $100, I give you $10,000 at the end of the day. Okay? News trading. Trading news is not bad. But if you're a person trying to grow your account, avoid the news. Okay? But a person that has capital, you've made capital, you've been saving, sometimes try. Okay? Try out your luck on the news. But remember, news are volatile. Okay? News are volatile. Your stop losses are not going to be respected. Blah, blah, blah. That is another video. Okay? So, okay, here we are. We have said don't ignore your own rules, avoid over trading. Then also spending. I talked about quick spending. The money you earn, you spend it all. The way you earn it, you spend it all. Avoid quick spending. Okay? Then avoid scared capital. Money that is not yours. Money that is has urgent needs. You have to pay rent and you're like, let me first flip the account, let me first trade NFP, then I pay rent. That is wrong. You're going to go in debts because of one mistake. Yes, money makes money, but then which money? Which money? So avoid scared money, money that is not yours. It inserts pressure on you. You're going to make wrong decisions because of that money. You're going to say, let me multiply it so that I can pay rent and also remain with trading capital and also eat. Okay? Eat, pay rent, look for capital. Slowly by slowly. Okay? So avoid scared capital. If you're still on the video, seems you've enjoyed, so make sure you subscribe, turn on that notification bell because you're going to be bringing out weekly videos. Okay, also comment the strategy you're using, how you found this video, telling us also what kind of content you want us to create for you. So key takeaways, things that you shouldn't forget. Okay, number one, growing your trading capital requires patience. You're not going to do these things in one day, in 1 week, 1 month. You'll require patience. Okay? Consistency is key. Okay? Building your capital does not happen overnight. Focus on the small and consistent gains, and over time, your capital will grow significantly. Okay? So as you see this table here, no risk, no story. Take the risk, do the mistakes. These things will all will all happen. But as long as you don't give up, you try to follow the few steps we have provided here, you'll do a better trader. Remember, enough is enough. Blowing accounts, enough is enough. Not making money, trading demos, enough is enough. Enough is enough. That is our theme this year. So with that, allow me stop here and catch you in the next video. Remember to subscribe, turn on that notification because we are bringing a lot for you this year. We have to be good and best traders. See you in the next video.